Deep Dive with David Stendahl, where we trade without ego, no emotion, no greed, and no opinion. Before we begin tonight's video blog, please read over our trading disclaimer and remember to trade smart and accept the reality that trading futures is risky. This presentation does not provide buy-sell recommendations, and our information is strictly provided for educational purposes only. As always, trade at your own risk and analysis. Hey there, it's David Stendahl with tonight's Deep Dive. It is May 22nd, 2019. I'm going to take a look at Crude tonight. The ETF, which is an inverse ETF, is SCO. Now, what we have here is a mixed trend. This little asterisk represents when there's differences in the different types of trends between the short, the middle, and the long-term trends that are out there. When we don't have the asterisks, as you can see with a number of the markets, it just simply means they have a strong trend, whether to the upside or to the downside. But with Crude, we've got a little bit of a mixture here. We also have a flat technical rating, which is not giving us any direction. So anytime we have a mixed trend and a flat to negative, at least a flat technical rating, then that generally means that there's ambiguity in the market and that opportunity is out there. And that's a reason that you'd want to look at the market and perhaps jump into a particular position. We've got nothing saying that the market's overbought or oversold. It's kind of in a limbo type phase. It's not sideways consolidating, but it is definitely has a mixed trend here. If we actually take a look at the market, you can see kind of a little sideways consolidation, just not strong enough to be considered from our perspective to be in a sideways consolidation. We would need this green line to be below that yellow line, and we're just not there right now. But there is ambiguity when it comes to the trend, and what I'm showing you here is that the fact that crude oil itself dropped off today's bar, where it was down not a huge amount but a fair amount, and we're now sort of sitting on very weak supports of the market. The next level down, the next key level, is going to be down here at 58.23. So it's got a ways to fall if in fact it does fall. Now our systems are short, but I want to focus a little bit more on where the market is and something to actually look at as far as a little mini support gap. So here's today's close. We've got some support here at 61 and at 60.28, but it's between 60.28 and 59 even, if you will. There's a little bit of a gap right through there. So if we're able to break below that particular threshold, then we'd be looking at a pretty nice little trade to the downside. And then support levels will kick in here. But just simply watch that particular level or that gap between that upper and lower levels when it comes to the support levels. Now our systems are short the market. So we're net short with three different systems, and we're taking advantage of this particular point in time, and we're looking for potential for it to break through that support level that I was pointing out, that weak one. I'll come back to it here so you can see it again. This is the one we're targeting, but the one that we're sitting on right now is at 60.56. That's the one that we'd like to see break, and if we're able to see that, then we've got this level right through here at 58.23 and another one down here at 55.64. Now these are all based on daily bars. When we look at the bigger picture and we look at these bigger support levels and targets, for upside and downside targets, this takes into account multiple time frames, weeklies and dailies and intradays. And so what we're looking at is that gap. And anytime we have a gap in some of these things, and a wide gap at that, then there's opportunity to be had. And the fact that we're sitting on very weak support, with the fact that we've come down to this particular level, and we've been there before. But if we can break this threshold, then I think there's a little more downside. So the fact is that we're short the market, and I'll show this, that on a seasonal tendency basis. Now, this particular chart is only 5 years worth of data, so it's not long term. It just simply shows what has happened over the last 5 years, and you can see we're at a bit of a peak right now. And it would be looking just on the seasonal tendencies for it to fall off until September, a little bit of a rally, and then a continuation to the downside. If we look at the 5, the 10s, and the 15s, you can see that there's a different picture here where we're here in kind of late May right now, that there's a little ambiguity going on here where the 15-year is definitely pointed to the upside and then wanes towards the tail end of the year. So it doesn't really peak until early July, and you got the this reddish one right through here, which is the 10-year. It's more of a consolidation, and then there's a sell-off at the tail end of the year. Point being is that there's not a lot of strength right now, at least in the coming 2 weeks or so. So that's why you want to be looking at that particular support level. If we hold, we hold. If we don't, then all the better for the systems on the short side. But when you look at the 5 years, and granted, it's only 5 years worth of information, so it doesn't give a crystal clear indication, and we're certainly not in a high accuracy phase right now with crude. But it is kind of a unique point where we're at that turning point right now, that pivot point, and so there's always that opportunity for the market to actually sell off. And so that support level that we're talking about with the market, if we can't hold here, then I would suspect that we're going to at least hit this lower level here at 58.23, and then more likely this level right through here, which is at 55.64. That gives us a fair amount of money to be made from that side. So systems being short, we want to take full advantage of that. So watch the system, see how they react, and specifically see how the market reacts to the fact that we're playing with the 200-day moving average, which is this gray line, and we broke through the 50-day, this yellow line. So there's enough of support and resistance that's happening there as well. So anything that breaks below that threshold, it will probably accelerate fairly fast and be in a position to take some good money out of the market. So let's see what does take place, and go from there. Thanks very much. Bye-bye.